This is Eric Moore with Mother.com with a quick market analysis here. We're going to be taking a look at the charts for the Dow and the S&P 500. It's going to be a quick video just to show you what I'm looking at in terms of short-term chart setup. Take a look at the S&P 500 here. We can see that as long as S&P 500 continues to hold above that threshold that we've been talking about for many months, then this market continues to be very positive to the upside. What we are seeing in terms of new highs, no surprise. Now, if you take a look at the S&P 500, we also know that as long as the S&P 500 continues to hold above this breakout level on its weekly chart, then this market continues to be very strong, and we should expect there to be continued momentum to the upside. Now, let me give you that price level for the S&P 500. It's 3329.62. So it needs to stay above this price level for it to continue showing this strength and for bulls to be encouraged. Otherwise, of course, we know that at some point, should we break below that level, then that's where we start seeing the look that would be called the bearish look. Now take a look here. We also see the RSI holding above 69.1 right now. So as long as it's holding above the 69.1 level on the weekly, that continues to be a good and stable market. Now we go to the daily, and this is the reason for the video, is even though we are making a move to new highs, we can see here market looking good. We still have that potential look. Now it hasn't happened, so let's not jump to conclusions, but we have that potential look over negative divergence based on this line here, which is the backtest line. If that continues to be resistance, in other words, if this continues to stall the market as it tries to move higher, eventually we are going to get that negative divergence, and eventually that's going to be the look that's going to start pulling this market lower. Now take a look at the 2 hourly for the S&P 500, and again we see that we are still within that area we've been talking about of potential resistance. Nothing has changed even as the market is moving to new highs here, continued new highs. But we continue seeing a market that is continuously coming back to this area here, and a little bit of hesitation every time it gets here since this break point here. Now, what the bulls would want to do clearly is bust through this level so the market can have an open space to the upside, or clear the ceiling to the upside in terms of the RSI. And then the reason for this video is, looks like we are showing resistance here, and that suggests that we might start seeing the market coming off intraday highs as of right now. Also, if we take a look at the Dow, and I want to show you the Dow. This is now the Dow chart, and I just had to clear some of the lines that were on the chart there so as not to confuse you. But this red line is consistent with this breakpoint here on this 4 hourly chart. I should mention for the Dow, it's a 4 hourly chart. That's it right there, 4 hourly. And I want to show you that this is where the market's been pulling back on a 4 hourly chart, and hence the reason for this video is it looked to me like we were starting to show potential resistance on this line, and recently we broke below here, which is the highs there. Resistance, 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 and now we are showing resistance again. And again, this line happens to be around the RSI 61.8 on the 4 hourly, and here I am using TD Ameritrade's charts, or TOS charts, think or swim charts. And we can see here on the Dow 2 hourly, we really haven't cleared this area of recent resistance, and so we are still within a potential look that the market is going to eventually pull back. Now take a look at the weekly. In conclusion here, and this is what the Dow needs to do, it needs to break out just as the S&P 500 has been able to do. Otherwise, failure to break out sets the stage for a pullback, maybe even a major generational high. And I keep saying that because one of these days, one of these failed breakouts is going to bring an end to this impressive bull market. But here we can see that the Dow needs to hold above 29,348.10. needs to hold above that price if it's going to be a true breakout with momentum. That is a requirement. And if this turns into a failed breakout, we know the drill. That means that now we start being open to a potential reversal in the market. If that happens on the weekly with a failed breakout, that would also be confirming this improvement as of last week's close with a declining RSI. Definitely that would be negative divergence, and that again would be setting the stage for a potential market pullback and a major move to the downside. And one final look as far as the Dow is concerned. The Dow has been the weakest of the major averages between the Dow, the Nasdaq, and the S&P, and we can see here that this is already did confirm resistance. And don't forget that that is also negative divergence because we went to new highs, and we did see that show a decline in the RSI. So we have the minimum requirement for a pullback, which is a negative divergence on the daily. So I would say let's just watch out here. I don't want to be too aggressive with breakout alerts because I see this potential pullback in the market. If the market is to move higher, it needs to clear that 4-hourly chart I just showed you for the Dow. Otherwise, I'll leave you here with market current trading session here, how things are looking. This is Eric Mwag with Mother.com. As always, good luck. Remember, it's an options expiration week, so be open for lots of games, either to the upside or to the downside. Peace and blessings. ESC.